To do today is I'm going to create support and resistance lines. Now, if you're new to this, I would just say hang in there. You may get a lot of new terminology, but that's okay. I know you'll catch up eventually. And of course, you do need to keep on watching the videos that I put out there on a daily time frame. So every candlestick represents one day. And you can see what happened yesterday on Friday. Jamia did some major move up from the day before it closed at $45. And this thing just rolled all the way. It just added $12, to its share price. So it's done some major moves. But what I want to do is right from back here, if we go all the way back, so we have this is January 2021. So this is almost like a year's worth of daily candlesticks. And we can see that when this thing started, there's a major area of consolidation. So what I'm going to do is we're going to start drawing our levels. And what we do with levels is we're looking for areas of support and resistance. The support being the low point, which tends to be the floor. So price action usually will bounce off of support, but if price action falls down through support, then that means the price of that stock is going down. What the levels really mean is that there are buyers and sellers at strategic price points. So, they've set up their computers such that when the price rises to a certain point, the computer would be told buy, 80 million of these shares. When it drops to a certain price point, the computer or the algorithm will simply say to sell. And so those price points are important to know as a day trader. You need to know where those price points are hidden, if you like. Because they're not going to tell you that, when price drops to this point, price is just going to keep on dropping. Those are the things that as a trader you kind of want on your charts to inform you as to whether you want to get into a trade or not. So I have my levels already preset in here. And so I'm going to start from the very low here, back in, March of last year, 2020. Jamia, I call it Jamia, but that's just the ticker name, JMIA, was trading at $2.15. So we can draw a level right there. Okay, so there's my red level. What this support level does is if this price action should ever come down this low, you want to be way out of that trade. But of course, we're not expecting it to come all the way down to this point. So let's keep on drawing our levels. And we're really, with the levels, we're looking to see where the candlestick touches that level, where we have the greatest number of touches. Now, the touches could be at the bottom of the candlestick or at the top of the candlestick. So I have another one here. We can see here, the top of the candlestick here, the top area here, but over where this my little cursor is, we see the bottom of the candlestick. So looking at this one, so this one 7/8, which is July the 8th of last year, on this day we see this green candlestick broke above resistance. To the left of my vertical line, you can see that price action had never broken above this point ever. It had come close to it here, but it didn't go beyond. It had come close to it here, didn't go beyond. Same here, never gone beyond. But on this day, it did. The minute it breaks, or the minute it broke above the resistance is always the ceiling. That is like that point at which at which sellers will sell. So the minute price gets to that point, the sellers step in, they're selling their shares, and the price always goes down. But on this day, there were more buyers than sellers. And that's why we have this green candlestick breaking above. Now, I want you to take note, between this day it broke above, it hasn't fallen below that point. So this is going to be a very strong level point very strong. It's going to take a lot for price action to come down to this point and break below it. Now you look at price action kept going up, so we're going to draw some more levels. What it is with drawing levels is you just have to kind of eyeball it. There is no hard and fast way of doing it. You kind of eyeball it and see where you can see candlesticks touching any level point wherever you move your level, where you see the greatest number of touches. We can see in this area so many touches here. So every time price action attempted to drop below this support level, which is the floor at this point, to the left of this candlestick, this same level was the ceiling, the resistance. To the right of the candlestick, it becomes the floor because price action is not dropping below it, which is good. It's a strong support level. So this would be a good area to buy. The minute we'll draw another support. I'm going to draw another level. So looking to the left, usually when you're drawing your levels, you're starting at the left. And you can see here, to the utmost left, you see this point here. That's one touch. To the right, another touch. And we can see it bottoming off here. So that's another level right there. And we're going to keep going and keep going. So I'm going to look for the bigger level, the stronger level points, or the more obvious ones. We have another bottom here. So price action came down here and didn't drop below. So let's see if we can find a level. When price action can drop below a point, usually it's a strong support level. So let's see to the left of the chart at the point at which it was resistance before it became support over here. It was a resistance at this point right here. So there's another level. There's another level. This is a nice clear level, because over the course of from August to November, that is 2 months, 2.5 months, price action did not go above this point. I'm going to change its color because that is a very strong. So that's a very strong level point. The minute it breaks above, guys, this is where you want to enter a trade. Price action has never broken above this white point in the history of this stock. And the minute it breaks above it, you want to be ready to enter into that trade, because once you can confirm. So what would happen at this point, because this is a daily chart, you always use your lower time frames to enter into your trades. Rarely should you enter into a trade on a higher time frame. The high time frame just give us a ballpark figure of what the stock is doing. We can generally see that this stock has been moving up. It's had some dips, some consolidation periods, but all in all, it's moving up. That's all you do on these higher time frames. Is everybody okay for now? Everybody good? Okay, you can start getting ready with your questions because I'm rounding up here. So this is a very strong level, and you can see what happened. 1, 2, 3, 4, 5, 6 days. For the period of over a week, this stock was just running up. And anybody who entered that trade at the point of $20.94 and you picked up, 20 shares, 50, 100, you'd be sitting pretty with this gain. So we've gained 21 to, guys, that's a $20 gain over a 6-day period. So $20, and if you're holding 100 shares, you know how much that gain that would be. So we're going to draw a few more levels. We can see some consolidation going on around here. So there is a level here, because price action wasn't, after it hit this point, let's get our level there. So that's an automatic level. It runs up 6 days, and then it's the sellers step in and start selling their shares, taking profit basically. And whenever there is excess taking profit, which is selling, the price of that stock will always go down. So in this respect, I'm talking about stocks, but this is applicable to Forex trading, cryptocurrency trading, futures trading. It's the same charting, principles and concepts that are used no matter what you're trading. So there, and then let's finish off our levels. Now we have another level here. So I want to see what happened on this day, Friday, yesterday. I'm going to draw a level. Prior to Friday, there would have been a level obviously there because price action topped here and then started heading back down, broke down below this next level, broke down below the blue level. You can see once it broke down below the blue level, then we had another 2 weeks of it being trading under support. And this blue level that was support all of a sudden becomes resistance because it's now resisting price action going above it. So on this day with this candle, price action ran up and we have another level here. Now, if I've already been in this trade for some time, but if I was wanting to enter into this trade, I would have my levels right here. And I would go down, to a smaller time frame. So this is the 15-minute time frame. Let's see. So this is that level. So this is like the day before price action just ran up. And if I'm looking at this trade, this 15 minutes or even the 1 minute, let's go down to the 1 minute. I usually enter my trades in on the 1 minute time frame. So this is, wait, let me see. Okay, so this is Friday. So that stock started moving from down here all the way up on Friday. It's gained like $18 per share. The market opens and this is the level I'm looking at. The minute price action breaks above this level, I'm entering in the trade. I'm entering that trade. That's going to be a good trade because this is the highest point that JMIA has ever been. $48. The minute it breaks above it, boom, you pick up some shares and you're sitting pretty for the rest of the day. This is how you use levels to inform your trading. It's just a map. It helps you understand understand better price action. At the end of the day, nobody can 100% predict what's going to happen on Monday, but we can kind of guess. If I looked at this, I will guess that there'll be a lot of people taking profit, a lot of traders taking profit, and there's a chance that this price action will drop. So this would be your point of taking profit. You wouldn't at this point want to get into the trade until, again, it breaks above the next level. Then you want to enter your trade again. And that's it. That should have been 10 minutes, but I went a little longer. It does take a little time to figure these things out, but eventually we do get there.